September 16, 1992. London wakes up to what seems like a normal day. Traders are sitting behind glowing computer screens. Banks are opening. Currencies are moving as usual, but behind the scenes, something massive is already in motion. A hedge fund manager has just placed one of the biggest bets in financial history. He is betting against the entire British economy. If he is right, he could make $1 billion in a single day. If he is wrong, he could lose everything. The trade he is about to make will shake global finance forever. The system that held Europe together. To understand this story, we have to go back to the late 1980s. Europe was trying to stabilize its economies. Different countries had different currencies, and those currencies constantly moved up and down. This made trade difficult. So European governments created a system. The idea was simple. Each country would keep its currency within a narrow range compared to others. If the currency moved too far, the country's central bank would step in and stabilize it. The goal was to create economic stability across Europe. But there was one major problem. Not every economy was equally strong. Britain joins the system. In 1990, the United Kingdom decided to join the system. It was now tied to European currencies. To maintain the exchange rate, they had to defend the pound at all costs. But Britain's economy was already struggling. Inflation was high. Interest rates were painful. Unemployment was rising. Many economists believed the pound was overvalued. But governments insisted everything was fine. And that created a dangerous opportunity. George Soros seized the weakness. While governments tried to protect the system, one investor saw something different. That investor was Soros had built a reputation as one of the smartest traders in the world. His hedge fund managed billions of dollars. But Soros didn't follow the crowd. He looked for weakness in economic systems. And when he studied Britain's situation, he noticed something. The pound was too strong for the British economy. Maintaining that exchange rate required extremely high interest rates. But the economy couldn't handle it. Eventually, the government would have to give up. And when that happened, the pound would crash. So Soros made a bold decision. He would short the British pound. Shorting a currency means borrowing it and immediately selling it, hoping to buy it back later at a cheaper price. If the price falls, the trader profits. But Soros didn't place a small bet. He reportedly borrowed and sold more than $10 billion worth of pounds. It was one of the largest currency trades ever attempted. And other hedge funds began to notice. Soon, many traders were also betting against the pound. The pressure on the currency began to grow. Panic inside the Bank of England. By September 1992, the situation was becoming dangerous. Investors around the world were dumping pounds. They had to step in. They began buying massive amounts of pounds in the market to support its value. Billions of dollars were spent trying to defend the currency. But the selling pressure didn't stop. In fact, it increased. Markets sensed weakness. And when markets sense weakness, they attack. Then came the day that changed everything. September 16, 1992. Later known as. The British government tried one last desperate move. They raised interest rates dramatically. The hope was that higher interest rates would attract investors to the pound. But the market didn't believe them. Traders continued selling. And the Bank of England kept spending billions trying to defend the currency. But the pressure was simply too strong. The collapse. By the afternoon, the situation had become impossible. The British government made a shocking announcement. The United Kingdom would withdraw from the European exchange rate mechanism. The pound would no longer be defended. Within hours, collapsed. Billions of dollars vanished from government reserves. And traders who bet against the pound made enormous profits. None more famous than Soros. Soros's massive bet paid off. Reports suggest he made over $1 billion in profit in a single day. The trade became legendary. From that moment on, Soros became known as the man who broke the Bank of England. It was one of the most famous trades in financial history. But the consequences were huge. The British government lost billions defending the pound. The event damaged the credibility of economic policymakers. And it exposed the power of global financial markets. Sometimes, markets are stronger than governments. One trader. One massive bet. One currency crisis. And a single day that changed financial history forever. The trade against the proved something powerful. In global finance, even governments can lose. And sometimes, all it takes is one trade.